Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence, and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
It's a red kind of day. Let's take a look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is down $29,429, below that $30,000 psychological threshold. It's sinking over 8% over the past 24 hours. The CoinDesk Ether price ETX index at 2191, also tracking losses of almost 11% over the past 24 hours. And the DFX CoinDesk's DeFi index is sinking over 17% now at 149. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And leading our story of the day is Terra Luna. Terra Luna, let's take a look at the prices right now. Terra USD, their algorithmic stablecoin, 31 cents, reaching a low of 23 cents over the past 24 hours. And Luna, Terra Luna, is down almost 98% over the past 24 hours, now trading at 82 cents, pennies. I mean, this is incredible. UST was an $18 billion market cap coin. Now it's just hovering around $5 billion. 13 billion wiped off the map in a matter of days. Luna was a $41 billion market cap. Now it's just around $700 million. So just over a month, we saw $40 billion gone, Lawrence. And I mean, a lot of people are getting wrecked.
A lot of people are getting wrecked. And I mean, look, if you've been watching this show regularly, which you all should be doing, and if you've been doing this for months, you've known we've repeatedly had guests on, warned that this exact scenario was going to happen. And one of the biggest warning signs, of course, was when they started buying Bitcoin to shore up their reserves as a it seems in retrospect now, a desperate measure to keep things alive. Look, if you look at the market cap of Luna and you look at the UST, mind you, is supposed to be set at $1. It's not. And it's now the entire market cap of it is about 4 billion. The entire market cap of Luna, which is Luna is supposed to support UST. It's again 4 billion. This is where we're at right now. This is a complete loss of confidence in this thing. It's a failure. It's a failure. And the warning signs were there for months, and people should have listened. Mm-hmm. Algorithmic stablecoins, as they're structured now, particularly this one, wasn't going to work. And everyone knew this. And yet we still have people blaming outside attackers. You know, they would have gotten away with it if it wasn't those meddling kids.
For the longest time, for months. Yes, we've had several guests on the show warning of the problems with algorithmic stablecoins. And so, yes, this event was predictable. And Emily, I wonder if you could weigh in your thoughts. I mean, in the broader economy, we're also seeing just a lot of pressure on equities, on the macroeconomic picture. And so something like this was bound to happen to projects with flawed architecture.
Sure. Well, I think what happened with UST calls into question a lot of the fundamental thinking about crypto, because Lawrence used the term loss of confidence. Crypto is based on collective belief, and a collective belief that an asset has value. That's a lot of what props up the price. And that's actually, in some cases, all that props up the price, right? It's the belief that this asset has value. And now we're seeing the dark side of that. When people lose that belief, there's nothing left to prop up a price, right? So this definitely calls into question the model behind a lot of different tokens out there.
Mm-hmm. All right, well, let's dive further with our first guest. We've got David Lawant. He's the Director of Research at Bitwise Asset Management. Welcome, David, to the show. So perhaps you could walk us through how you believe we got to this death spiral we're seeing with the Terra Luna ecosystem right now.
Yes. Hello, everyone. It's great to be here. So I think that, as you all said very well, I think the most important thing to understand at this moment is that Terra and UST, they have this very specific stabilization mechanism that is different from other stablecoins that we see and that have been working in the market for a much longer time, and things like USDC or Tether or even DAI. I think that the overall dynamic here at play is that the whole Terra ecosystem is kind of this game of confidence, in that it is an algorithmic stablecoin that has been more recently partially backed by Bitcoin and other crypto asset reserves, but essentially it relies on the issuance of Luna, and it depends on the price of Luna, and it is a type of asset that is exposed to quote unquote bank runs. And I think that's what we have been seeing since the weekend, and it has been accelerating overnight.
Well, it's interesting that you say that this is a confidence game, because it implies that there is a con artist involved. And we do have Do Kwon, who is the CEO of Terraform Labs, who is behind Terra Luna. He has come up with a plan. He says, before anything else, the only path forward will be to absorb the stablecoin supply that wants to exit before UST can start to repeg. There is no way around it. We propose several remedial measures to aid the peg mechanism to absorb supply. Among those proposals is to increase the burn rate of UST. They also want to continue to explore various options to bring in more exogenous capital to the ecosystem, which is another way of saying their ecosystem needs continuous third-party capital to survive. And that raises all sorts of questions of how sustainable is that. And he also mentions that as we begin to rebuild UST, we will adjust its mechanism to be collateralized, which seems to me an admission that their algo stablecoin model didn't work and that perhaps they're pivoting to become a more centralized stablecoin. So maybe I could ask you on the first system. Their model requires continuous third-party investment in order for it to survive. How sustainable is that?
Yeah, I think you put it very well. And I think that they're slowly realizing that it is relatively hard to sustain a stable, algorithmic stablecoin in a market that is as volatile as crypto is, and especially under the current environment. I do believe that the idea right now, the plan has somewhat shifted a little bit to accelerate the absorption of all this Terra and Luna that once out of the ecosystem. So yeah, I agree with you in that I'm not very sure how things are going to play out from here, but I do believe that the way forward for the Luna and Terra ecosystem is to move more into a system that is collateralized with assets that are independent of the Luna ecosystem, the exogenous capital that we just.
So it's no longer going to be an algorithmic stablecoin model. They're essentially going to pivot to become a centralized stablecoin of sorts.
Yeah, it's hard to know, right? The situation is very fluid, but what I think it's also important to have in mind is that we have seen not very different initiatives in the past that also didn't work very well. Some of you here might probably remember Basis, which was around a few years ago. So I do believe that this is a more sustainable path for their ecosystem.
You're talking about sustainable path, and that implies that it does have a future. We had Do Kwon on a few months ago, and one of the questions I asked was, okay, how are you different than Iron Finance? And you remember Iron and Titanium, they basically collapsed. And he said, well, the economics are different with Terra, Luna / UST. It seems that they kind of ended up in the same place, and we don't hear about Iron anymore. You're talking about a route forward, but is it really going to be there? Lots of people lost billions of dollars in this in a matter of hours. Would anybody want to revive it or care anymore? Is there anything that would even do that, number one? And number two, doesn't this hurt the overall ecosystem of the cryptocurrency markets when people are like, you know what? I don't really trust any of this anymore. I've just watched people, the smart money, lose billions with a guy who had trusted a model that everyone said wasn't going to work, and sure enough didn't work. So what makes this any different?
Yeah, no, I agree 100% with you, Lawrence. And it's hard to know. All I'm saying is that I think this is the least worst measure that they can take at this point. But I agree with you in that the confidence around the Luna ecosystem will probably be different from here going forward, and perhaps even towards the whole algorithmic seigniorage-based type of stablecoins. What I think is important to understand from a broader market perspective is basically two things. The first one, as I alluded to in the beginning, the Luna and UST type of structure is very different from a lot of the other more established stablecoins that we see in the market that are properly backed either by US dollars or by other crypto assets. And the second thing is that, especially during the weekend, we started to see a fair amount of concern with regards to them potentially selling their Bitcoin that were on their reserves. I think they did that to some extent. And then on that side of things, what I see is a temporary risk, but not a systemic risk across the crypto market. But I agree with you in that from here on, there's probably going to be a little bit of untangling work to do in order to differentiate the projects that are sustainable and the projects that might not be very much so. It's also very hard to distinguish what's going on within the Terra ecosystem and the broader market environment. As you mentioned in the beginning of the show, there's a whole broader macro situation that is putting pressure on risk assets more generally, and crypto within the falls within that spectrum. So it's a little bit hard to untangle everything that's going on right now in terms of the returns that we see for the broader crypto market in general.
It's interesting you say that, David, because there have been conspiracy theories out there lodged about, was this a deliberate attack? Everyone from Citadel, A16Z to Janet Yellen herself. So does it even matter, though? Because the whole idea is that this was an algorithmic stablecoin that was supposed to be able to adjust and maintain the peg. So, and if there's a market event in the future where there is a exodus from the system, shouldn't it be able to withstand that?
Yeah, no, I think that's a great observation, Christine. And I do believe that the system is inherently unstable. So this type of situation was extremely likely to happen at some point in time. And actually, I think that the earlier concerns around the whole ecosystem was how it would sustain its peg in an environment where Anchor, right, which is this borrowing and lending platform on the Terra ecosystem, the Aave or compound of Terra of sorts, was offering these very high yields. So the initial concern was that, hey, what's going to happen when these yields start to go down, because they're extremely high even for DeFi standards? And we didn't even get to that point, right? Basically, what was the only thing that was needed for us to see the type of pressure that we're seeing right now was basically a sharper market movement within the crypto market and risk asset markets in general. I do agree with you that these are pretty unstable systems in the long run. But then again, I don't believe that this is true for the other type of stable coins like USDC and Tether and even DAI that have a much more resilient and robust structure.
David, let's just look towards the future here. You're talking about all the different types of stable coins. From a regulatory perspective or a lawmaker perspective, they just see these as like stable coins, or they just see these as like crypto. I mean, they're not looking at all these, fine differences. And if crypto is the wild west of finance, algorithmic stable coins are like, I don't even know where that is. It's like on some other wilder west, right? So question is do you think regulation is needed? Because, behind this crash, which may be sort of entertaining to watch, there's a real human cost. There's people who are losing their savings. I mean, there's people who are losing significant amounts of money. Do you think regulators should intervene to prevent something like this happening in the future? And if so, what should they do?
Yeah, no, I love it that you're touching on this, Emily. I think that regulation is coming, and regulation was already probably coming to the stablecoin market, right? Since the executive order, I think there was a very clear directive for certain regulators to start paying more attention to this market. We did see Janet Yellen's remarks in her Senate testimony saying that she wants to see regulation around stablecoins. I think she mentioned that she wants to see that by the end of the year, and she kind of lumped everything a little bit perhaps together, also mentioning the UST debacle. I think that, and then I guess the most important thing to understand here from a regulatory perspective is to understand that, to keep in mind that these stablecoins, they are different and they have different structures and they are subject to different risks. I do believe that this is the path for sound regulation going forward. I hope this is the path that is going to be taken, but now is probably too early to tell. But I do believe that the industry should perhaps focus a little bit more on spreading that message.
So just on the regulatory
definitely
front,
have to.
Sorry, go on, Lawrence.
Oh, I was just going to ask it. Okay, Emily, you can go. That's fine.
Sorry, a quick follow-up on regulation. I know this is a tough question, but when you say regulation is coming, in terms of algorithmic stablecoins specifically, do you have any idea what that kind of regulation would look like or what the requirements might be or what they should be?
I think it's very hard to know at this point. It's going to be mostly speculation, but I do believe that one potential path forward would be to treat stable coin issuers, and here it's very unclear whether what type of stablecoin issuers we're talking here, but treating them as depository institutions, right? So putting them under the umbrella of these of banks and other financial institutions that could potentially fit into a similar sort of risk environment. So I think that this could potentially be one way forward, but I think it's pretty early to know. It looks like that the Treasury will be issuing a report on stablecoins in relatively short order. So hopefully that will shed some more light into this.
You know, we had Coinbase's earnings come out yesterday. They were quite disappointing. The revenues have gone down over the past quarter, even though they tried to sound upbeat for the upcoming quarter. Nonetheless, everything seems to be quite down. Does this crisis in UST/Terra Luna, do you think that that's ultimately going to affect the overall crypto market in terms of the exchanges, how much money they're going to bring in, how much activity we're going to see on some of these exchanges going forward?
Yeah, this is a great question, Lawrence. I do believe that there is a short-term impact, and I think we're seeing part of that right now. However, I don't see, first, any sort of systemic risk. And second, I do believe that the fundamentals around crypto, they're strong enough so that people will eventually realize and perhaps start to pay more attention at the real fundamentals. But I definitely believe that there can be a short impact here. When we look at Coinbase's results, we did see a sharp drop in revenues. Their revenues came out at $1.2 billion. That's a 53% decrease versus the previous quarter. And perhaps even more importantly, they guided for an even weaker Q2. So they showed a little bit their April numbers and some very broad and preliminary guidance of what Q2 will look like. And it's probably going to be worse than what we saw in Q1. Having that said, I do believe that Coinbase is an exceptional company that is extremely well positioned to take advantage of the great of the crypto market in general, but that those strong long-term fundamentals right now, they're being overwhelmed by these pretty bearish earnings momentum. So that's what we're seeing in terms of price action there. I think the last time I checked, the stock was in the 70s, and that's what I think is at play at Coinbase.
All right, David. Well, we went through a gauntlet of questions there. Thank you so much for being patient in answering them. And it sounds like there's going to be a lot of tough times ahead, but thanks for your input. That was Bitwise Asset Management Director of Research, David Lawant. Coming up, we've got new inflation data out. What impact could this have on the crypto markets? We'll check in with economist Marc Ostwald of ADM Investor Services International. All right, let's see what Bitcoin's doing. The CoinDesk Bitcoin price XPX index is at $29,847. Bitcoin sliding over 6% over the past 24 hours. CoinDesk Ether price ETX index at 2246. ETH also tracking losses of over 7%. And the DFX CoinDesk's DeFi index at 148, taking losses 18% down over the past 24 hours.
The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Today we have brand new inflation numbers coming in at 8.3%, still very high, but I guess some people would say could have been worse. In any event, Bitcoin, the world famous inflation hedge, reacted to this news by falling, apparently. So that's interesting. Anyway, joining us now to break this down is Marc Ostwald, Chief Economist and Global Strategist at ADM Investor Services International. Hi, Marc.
Hello.
Okay, let's just get into the inflation numbers. Bitcoin apparently reacted negatively to this. Of course, that's a very short-term reaction. What do you see going forward, with it, both in Bitcoin and sort of the larger stock market? Do you think that the worst has passed? Have we kind of reached the peak, or are we going to see more pain to come?
I think the problem with the inflation numbers that we had today was not so much the headline numbers, which we're a little bit above expectations, but with the core inflation data, which was way above expectations, 0.6 month on month, 6.2 year on year. And really within the details there, people had expected the fall in energy prices, particularly gasoline, to have basically, created a profile for inflation. We've passed the peak, which we most probably have, given base effects, and that towards the middle or the certainly sometime during the third quarter, the Fed could start dialing back perhaps some of this really hawkish rhetoric. In the event, it turned out inflation pressures, like electricity or gas utility price. There's price pressures everywhere, literally. New cars. Businesses were up enormously on what the market reaction in US Treasuries was probably the most instructive thing, given that we'd had a kind of flat move the last couple of days, which basically suggested that the market was moving away from worried about the curve might have to do. The Fed will actually have to respond to growth, focus less on. Well, basically, we've got a situation where that critical area of the ultra short US yields go back to 2.6, 2.7%, and for a lot, and it doesn't really matter. The defensive qualities of being aimed at.
Okay.
Hold
on there, Marc.
Basically there.
We can't hear you so well. You're breaking up, so we'll have to take a quick break from there. That was ADM Investor Services International Chief Economist Marc Ostwald. Coming up, we've got derivatives exchange Deribit to talk about volatility, and we'll check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
If you're an options trader in the crypto markets, chances are you're trading with our next guest. It's Deribit, the largest crypto options trading exchange in the world, based in Panama. And joining us now is Luuk Strijers. He's the Chief Commercial Officer at Crypto Options and Futures Exchange Deribit. Good morning, Luuk.
Good morning, and thanks for having me.
Thank you for being here. Of course, you're the right person to talk to today, because this is quite a volatile day in the crypto markets. And if there's one thing that we know about options, it's all about volatility. So what are you seeing right now in the crypto markets, particularly in the options market, when it comes to how people are positioned in Bitcoin, in ETH, et cetera, at this really trying time?
Yeah, so we see a lot of activity, as you can imagine. So the market in our entire product range is highly active. Same across the entire space, of course. You already covered inflation, the UST Luna story. So all of that is causing uncertainty, causing the markets to decline and implied vol to spike. So we've seen implied vol trading at around 60. and it spiked to over 90 in let's say 2 days, which is incredible. As you mentioned, option prices are impacted by implied vol, so the premiums are getting more expensive. So what we see is a lot of people either benefiting from this, but also using our market, using the various strategies in place to protect their portfolios. So options can be used to benefit from potential upside. That's, let's say, the easiest approach. But we have a lot of institutional flow, so around 80% of our market is not retail, but it's actually very large firms trading and especially hedging their spot portfolios. So when underlying markets are crashing, Bitcoin at 29 and a bit, you see a lot of put hedging. So we see more, the biggest volume instruments are the puts these 2 days, while typically those are the calls. So normally we are skewed towards bullish behavior, and now it's the opposite.
So where is the market kind of like pinning its point? You know, you have this so-called max pain point that you guys follow, but also where in general do you pin, for instance, Bitcoin right now? How is the market positioning with it? As you mentioned, the put-call ratio has gone up tremendously, but nonetheless, generally it's been called. So if we were to step back and look at the market, kind of which way is it going?
It depends on which expiry you look at. So longer dated, it gets a bit more bullish. But for example, max pain for May expiry, looking at that now, is 37,000. So it's quite away from where we're trading now. Typically, you see bigger open interest at the large numbers. So, for example, we see a lot of put open interest in the 30,000 strike. So we're looking at a few thousand on that particular strike. 20,000, of course. 44 is more bullish. So we see 44 and 50 are bigger. It really depends on the expiry, but
are those
the bigger numbers are traded more heavily.
Now, those high numbers there that you were just citing, the 44s, et cetera, were those initiated as calls that were being sold in spreads, or is it just?
Yes, so partially to fund the trade, as in you sell the higher strikes to fund your exposure to the lower ones, but also most of them were open before, let's say, this week's carnage. So open interest is more sticky, so people don't tend to close that quickly.
Of the altcoins, is there anything that's grabbing your attention, or do you see opportunity?
We actually launched them in April. So we used to trade BTC and ETH only, as in a very wide instrument range covering BTC and ETH. And what we did over April and early May is expand that, which is rather unique for us. For the altcoins specifically, we expanded with a little bit less than 20 altcoin perpetuals, margins that settled in USDC, so stablecoin, a linear instrument, covering all the names, including Luna, for example. And as an inverse product, like we trade BTC and ETH, we launched Solana. So we have the full Solana suite now because of investor demand. So the linear instruments are only perpetual, which means more short-term trading, directional exposure for seconds, minutes, hours, or days. But if you look at Solana, we have them up until quarter at this moment, so you can trade them up until June. But we will most likely expand them until the next quarter, so September, so you can get the entire suite. So you can get futures, options, etc., based on Solana as an inverse instrument. So the feedback is very positive. People have been asking for this for quite a while. Why don't we expand? But the problem for us is that in expanding, you need coverage at all times. So we have a lot of instruments linked to Solana, puts, calls, strikes. And one single name results in let's say, hundreds of instruments, and all of them need to be quoted at all times, because that's like our policy. We want to safeguard market quality, not only today when you buy it, but if you decide 2 weeks from now to sell your position, we need liquidity as well, which means liquidity over the weekend, which means proper quoting on a Sunday evening, etc., which results in less market maker coverage. So it's not that easy to have a very wide underlying choice when it comes to options, because the impact for market makers is significant. So that's why we're always hesitant in building and expanding.
Luuk, I know you're a derivatives exchange, but wondering if you could comment on Coinbase. They had earnings yesterday and revenues came in lower than expected for the first quarter. Do you see this as a trend among crypto exchanges in general?
Yes and no. I don't think a lot of them are loss-making, as Coinbase numbers reported. Of course, we and other markets see a decline in new client onboarding volume. So if the market is bullish, we tend to see most signups, but also trading volumes are simply down. So yes, I think the trend of a negative performance versus the previous quarter is definitely there, but I don't think it would result typically in loss-making P&Ls. But I think their model is slightly different. They have a lot of staff, but also marketing expenses, which differs from exchange to exchange.
Luuk, where do you think the bottom is? How bad is this going to get? And what if you had to guess? I think that's what everyone wants to know for Bitcoin and just some of the alts.
The alts are, of course, difficult. If you see that Luna is reaching zero in a very rapid pace, I think people wouldn't have expected that to move that quickly. For Bitcoin, I think a lot of people hoped 30,000 would be the bottom. We see more and more interest in, for example, people asking us to launch the 50,000 strikes, because some of them are expecting the market to continue the crash. I think cryptos are heavily oversold when you compare it to equities. It's risk off, essentially the same as let's say tech stocks, but I think it has been moving very rapidly, and you can wonder why CPI numbers have that much of an impact on crypto. But where the bottom is, I never dare to answer those, because it's difficult to predict. But I don't think we are at the bottom. So it can, looking at the markets and the way news impacts volatility and trading behavior, it can go down beyond current levels.
All right, not at the bottom.
I was going to ask. I was going to ask about your bill in Panama, the one that you've been lobbying for. But before we do, you mentioned that you have perpetual futures in Luna. Did you notice any unusual activity in the lead up to what just happened?
No, so we just launched altcoin perpetual. So we are far from, let's say, a driver in this space. Even though I would like to state otherwise, we are following. We are one of many markets. We want to offer our investors choice. That's why we offer this, and our markets are in line with others. But we're not let's say the price drivers, the initiators of different behavior. But we have less activity there, so I wouldn't say there's anything to see on our markets at this moment. Our options market is totally different. We are leading there. We have 90% market share. We have billions in open interest. We can definitely see stuff happening there. But in the altcoin perpetuals, is simply too nascent yet.
Okay. Yeah, I was, and of course, you just real quick, we were talking about Panama. I mentioned you were based in Panama, and you guys are lobbying for something there, correct?
Yeah, so there's a new bill in Panama. It has not been approved yet. So some media claim it's already approved and it's in the works. It's not. The president still has to approve. So there's multiple layers of approval, and the last one is the president. And this is more like a framework. So the actual regulation, which is the key details for anyone in the space, they will have to be defined 3 months after the president signs. So the president has until the end of May approximately to sign, or veto it, or amend it, so he can also suggest changes. And once it's approved, the Ministry of Commerce has to come up with the actual regulation. So a platform like us, what are the requirements KYC-wise, AML-wise, all of that stuff, trading-wise, what is impact and what's not? And that's still to be seen. So yes, we are in talks, like many others, because it covers the entire crypto space, and like issuance of tokens, DeFi, everything. It's meant to be a little bit vague, but all-encompassing. So purposely a little bit vague to make sure that all crypto activity is covered. So it's a promising setup, but the devil's in the details, of course, and that remains to be seen. Panama is very strict when it comes to, let's say, opening bank accounts. You have to have bank reference letters. You have to scan all copies of your passport, which is kind of unique globally, and also results in tech issues. So the typical KYC tools available don't verify all passport pages. They only look at the front page. So there's a lot of this kind of nitty gritty, but these details are important to us. So they could impact us technically or reg-wise.
All right. Well, Luuk, fascinating to see how it evolves. Appreciate you coming on the show. That was Deribit Chief Commercial Officer Luuk Strijers. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So we do have Treasury Secretary Janet Yellen mentioning UST at yesterday's Senate hearing. What did she have to say?
Good morning. Yeah, so Janet Yellen spoke to the Senate Banking Committee about, as a representative for the Financial Stability Oversight Council. It's a U.S. entity composed of top regulators around the country who are basically tasked with making sure that the U.S. financial system does not collapse. Unprompted, in conversation with Senator Pat Toomey, the ranking member on the committee, she mentioned that the Terra USD, UST price had collapsed. It had lost its peg. This was part of a conversation about regulating stablecoins, and she said that there has to be some kind of legislation or regulation overseeing stablecoins, ideally by this year. Unclear yet whether we'll see anything. The only bill right now that we've heard of is from Senator Pat Toomey, but his bill does not address algorithmic stablecoins. But clearly this is something that's on regulators' minds. They're watching this. They're looking at, I assume, whether or not people are being impacted by the price fall. And we're seeing reports that people are losing quite a bit of money at this point. Yeah. So I imagine it's going to be a topic that will be of increasing interest in the coming days.
Yeah, I was just going to ask. You have people who, retail investors, of course, who lost plenty. They lost life savings, et cetera, in the United States. But more importantly, for senators, institutions lost a lot of money. And I say more important because that's who writes the checks. So do you think that with a lot of institutions losing this kind of money, that it might light a fire under the collective Senate's chairs?
It's very possible. I mean, it'll depend on which institutions and how influential they are. But certainly we're at a point now where you have lawmakers and regulators alike looking at, it really just looking at I don't know if they're looking at the price charts, but all you have to do is look at the price chart to know that something is clearly, gone badly wrong. And this is the exact kind of thing, depending on who has exposure here, whether it's just crypto companies, whether or not, any traditional financial institutions have any exposure to this, either because they're invested in crypto companies that have exposure to this, or, I can't think of any institutions that have directly announced that, investing in Luna or holding UST, but, certainly wouldn't put it out of the realm of possibility. And if you are a company that is in that position, then you are now facing a massive, massive risk. And if this has a spillover effect to, other parts of the economy, for example, we're seeing people say that a lot of the other crypto markets are down because of the chaos going on in Luna. For example, because of the dumping of, Bitcoin reserves, which is, pulling the Bitcoin price lower. Then, it's the exact kind of scenario where, on Monday we talked about the Fed publishing a report saying stablecoin run risks are a concern. This is one of those concerns.
Nick, what might the regulation of algorithmic stablecoins look like?
It could go a couple different ways. So one of the projects that we kind of look at back in 2018, if anyone remembers Basecoin, that was an algorithmic stablecoin that shut down and returned funds to investors because the SEC said it looked kind of like a security. So it's very possible that, Terra and Luna look kind of like a security through that kind of analysis. And so the SEC might have a say here. It's also possible that, bank regulators might want to take a look, especially if any, banks are involved. If it's not banks and it's not security, then that's where things get a little bit more difficult. That's where Congress might have to step in and say, okay, well, this doesn't fit neatly into any of the existing buckets, so we have to take a look at whether we need to create a new bucket or whether there is a regulator that has the existing oversight authority to take a look at this and say, all right, well, clearly something's wrong. Here's how you gotta, here are the standards you have to meet to prevent this from happening again.
Mm-hmm. Well, see how that develops. Nick, thanks so much for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for this State of Crypto newsletter on CoinDesk.com. All right, let's check in with Crypto Twitter for our tweet of the day. And this is Ryan Adams from Bankless tweeting, "No, I don't think UST will obviously die. It's not certain. But the fact that we have to rely on a bunch of billionaires and funds to save it is exactly the problem. That's the system we left. I didn't come to crypto to trade one set of bankers for a new set of bankers." Just some food for thought. That's it for First Mover. Thank you, Emily and Lawrence. I'm your host, Christine Lee. Meantime, check out the friendly folks at The Hash at noon Eastern and yours truly with All About Bitcoin at 3 o'clock. You're watching CoinDesk TV.